Okay, we're back. This is Josh Jelinski, the financial quarterback, with Dr. Lacy Hunt. So it seems to me that one of the only ways to stimulate the economy would be to have a lot more babies. So luckily I have 6 kids, but I'm a little abnormal.
Well, babies, population growth and babies, family formation are very stimulative to economic activity.
So we should be giving monies to people who have babies, or to encourage that.
Well, think about this. Think about the amount of household and business investment that is needed when you have a rapidly growing birth rate. You have to equip the babies with a lot of things. Firms have to rev up production, and then in time you need more schools. You need a whole host of things. And so, for example, in the 50s, 60s, and 70s, when the economy was very lightly indebted, we had very positive demographics, and we had very healthy investment. Japan, the population is declining. Same is true in China, in my opinion. And so you do not have this demand for investment, household and public investment. And so, although there would seemingly be a shortage of people, the more powerful effect is the depressing effects on investment. And another way of thinking about this is to recall your production function from economics, which is universally applicable, which says that economic output is determined by technology interacting with land, labor, and capital. So the marginal revenue product of debt capital is falling because we're overusing it. And so that triggers the law of diminishing returns. But one of the consequences of the poor rise in the standard of living is that we have deterioration in demographics globally. There are some pockets, but the global population last year was the slowest growth rate since the 1950s. And in the major economies of the world, China, Japan, Europe, and the United States, the demographics are absolutely horrible.
What about this year?
When you don't have...
What about 9 months after March 2020? Have we seen a little boom?
Well, they expected, there were a lot of cute articles that with everybody in close proximity, that the number of births would go up this year. But we already have the tabulation from 5 states, including California, Florida, and Arizona, and a couple of small states. And now we do have to allow for the 9-month factor, but the numbers are in, and in just those 5 states, the number of births was 50,000 fewer than a year ago. And that doesn't surprise me at all, because economics is a major determination. And it was a bad year for the economy last year. People were uncertain, and they did not have babies. And we have numbers that have come in for about 8 or 9 other countries, and in every one of them, the number of births fell.
Yeah, I have another theory. I have another theory about that. The number of divorces, I think, went up. I mean, I think people couldn't stand living together. So rather than, I don't know if is there any economic number on divorces? A rise in divorce?
Interesting idea.
Yeah, that'd be an interesting study. So we'll be back with concluding thoughts with Dr. Lacy Hunt, Executive Vice President, Chief Economist of the Hoisington Investment Management Company, when we return. 888-988-JOSH, 888-988-5674. We'll be back after these messages.
The preceding program was sponsored by the Jelinski Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jelinsky.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelinsky and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation.
Advisory services offered through Wealth Quarterback LLC.